Dan Dolev from Mizuho upgraded the stock to a buy last week. He joins us now. Dan, just give me your evaluation of some of the claims in the Hindenburg report. It's a mix of, actual allegations about inflated user counts and things like that, as well as some anecdotal stuff about, uses, perhaps illicit uses of the Cash App.
Yeah, hey, thanks for having me. Yeah, we upgraded last week. Again, we didn't upgrade on the Cash App. We upgraded on profitability. That still stands. Our concerns about the Cash App still stand too. But let me talk a little bit about the allegations. So the main thing, or I guess the most important allegation, is like how many of the 50 million monthly average users are actually used for drugs, sex trafficking, et cetera, et cetera, et cetera. I think it's actually a very, very small portion. Like, I can't imagine there's that many drug dealers in America, right? So I actually think that there's a lot of unsubstantiated stuff in this short report, and the proof is in the pudding. Gross profit or revenue is kosher, and it's very strong. So I think there's a lot of allegations there about the songs and what Deidre was mentioning, which I think are completely, false.
There was some commentary, and you sort of get to this as well, that a lot of the issues perhaps not particularly new to investors who have followed the company and have been invested in the company. And maybe it's sort of practices that are common in the industry to some degree. In terms of peer-to-peer payment networks, you're going to attract all types. On the other hand, the stock was down 15% today on 140 million shares. That's like 12 times normal volume. It strikes me that something in here struck people as new, or at least worth acting on, whether it might be the fact that it could just invite regulatory scrutiny that might not otherwise have been there.
I think you're right. I think it's two things here. First, it's the fear of regulatory scrutiny regarding interchange rules, right? Remember, they have to stay under 10 billion in AUM with Sutton Bank to be under the to receive unregulated interchange, which is like 30-40% of gross profit of the Cash App. But I think the reason the stock was down today is not because what was in the report, but what wasn't in the report, which is there weren't that many numbers. Some of the numbers were inaccurate. And I think that people are worried. Again, like if they had actually put real numbers in the report, if you understand my logic, I don't think the stock would have been down that much. There was a lot of, hearsay. There was a lot of huffing and puffing about songs. To me, it was somewhat sensational. I have to be honest.
Yeah, I mean, there's no doubt it was written to be provocative and to get attention, obviously, and that's the way that Hindenburg has tended to do things. They have a pretty good, hit rate or track record in the handful of situations we know about. However, there was some stuff about, former employees saying that some of the kind of fraud losses might be hidden in sales and marketing. So, in other words, there was allegations about accounting practices in addition.
Right. And you want to hear actually the funniest things that I think people didn't pay attention to. I think, if I remember correctly, they said that, high percentage, like 40-50% of accounts that were reviewed for fraud were actually fraud. Shouldn't it be 100%? Aren't these accounts the accounts you want? So what they're basically telling you is that the compliance department of Block or Square, I keep calling it Square, is actually doing a good job. So there's a lot of things that are weird. I think the reason for the 15% is the good reputation that Hindenburg had with different calls that they made. And I think that scared a lot of people. Right.
No, fair enough. Yeah, presumably that wasn't just a random sampling of accounts investigated for fraud. I want to get a quick word from you, if I could, on Coinbase. Obviously, different situation, but had a bit of a regulatory cloud hanging over it at this point. But also, I guess, a lot of concern about just volumes on the platform and the fees, and it doesn't seem to have a way out of essentially burning cash for a little while.
Yeah, I think very different from Square. Coin is in real trouble, right? If what we think is going to materialize, and we published on it today, almost a third of revenue, 35% of revenue could get wiped out. So if altcoins are banned, and I'm not even talking Ethereum, if staking is banned, that wipes out revenue. They're going to burn so much cash. I don't even know how many quarters they could stay alive if this actually were to happen. Plus, retail is dead. No one on the retail side is actually trading crypto. It's all institutionals that are trading at a very low take rates. And USDC is falling apart. volumes on USDC are down. Market cap is like down like 10-15% from where it was like a week and a half ago, which means that the net interest income that they're earning is going away. So I think it's like the perfect storm.
Fascinating. Yeah, it's very interesting, and it's kind of diverged from the Bitcoin price, which has picked up recently. It's just not going to the benefit of Coinbase at this point. Dan, thanks so much. Appreciate you coming on today.